Hello, everyone. Thank you very much for joining us for Top Dogs 2026. I hope wherever you are, it's somewhere relatively cool. So now it's about 2 p.m., and we'll do our best to wrap up here by about 3. I'm joined today, as you can see, by two of my colleagues from Friend, who many of you will, I'm sure, know well, Clive Bidwell and Vicki Wright. Um, and you can see us all smiling here. There you go. Um, so, as you will be well aware, because you're reading the same news story as I am, the world keeps changing in unexpected ways, and that change is happening faster than ever. That's why our theme this year is volatility, change, and resilience. And as we've read through the FTSE 100, we've kept that in mind. So, what we'll do is we'll highlight relevant examples to this theme as we go. And you can see here, because we've got our list of 7 categories, that we're also looking specifically at AI in reporting for the first time as its kind of own specific category. So now we're going to turn to the answers that you gave us to the survey we sent out last week. So we'll look at the first one here. So we asked you, how much has the geopolitical environment affected your business's performance and prospects? So I think quite a clear picture here. Either moderately or significantly was the clear majority. And I think that's borne out by the conversations that we're having with our own clients. So certainly, I think the notion that the world has changed and how businesses are run has changed is pretty inarguable. We also asked, which factor do you believe will impact reporting the most in the next 5 years? And here we sort of gave a kind of quite a wide range of options, but the clear popular one was new technology, including but not limited to generative AI, which I think is a fair kind of bet. There's also a number of responses referring to UK SRS, of course, which is a sort of the UK's version of the ISSB sustainability regulations that are coming in soonish. So that was interesting for sure. One of the other ways that the world is changing, of course, is digitization. Everyone's living a life that's much more online than it ever has been, and reporting is not immune. So we asked what your understanding of digital reporting was, and we're very gratified indeed to see that most folks agree that it's a full HTML report, including XBRL tagging, as opposed to some of the other perhaps slightly less comprehensive and slightly less useful options that are out there. So the final question was, which of these options would you say most closely reflects your priorities on AI and its impact on the annual report? And again, with this one, as you can see, very clear level of response here, which is to say that most people are prioritizing AI readability. So that's very interesting to know, and we will pick up a little bit on that theme a little bit later when we talk about our digital top dogs winner, I suppose. So the first of our 7 categories that I'm going to highlight here is marketplace, and obviously something that is, you would hope would be very responsive to our theme of, change and volatility and resilience. So there are a number of kind of big opportunities here for reporters to do well. Certainly listing or discussing rather the impact of bigger macroeconomic trends, talking about then perhaps specific market and regulatory trends on top of that. It's the combination that we think is best. And then talking about the strategic implications of same, right? So the idea is that these, certainly marketplace and strategy, should be 2 of the sections in the report that are most closely kind of drawn together. And there may even be a case nowadays for combining them to some degree, right? Because it's so important to talk about, well, what are the knock-on effects of all this change happening in the world? And obviously, ideally, we're going to find insightful commentary in the marketplace section, right? Rather than just sort of some bullet points or some stuff that's been rolled over from previous years and whatever else. So while there are opportunities, there are also pitfalls that reporters can unfortunately find themselves falling into. And as I just noted, I think given how much the world is changing, rolling the same trends forward every year, I think probably not the right move. Equally, these things are a lot more powerful and they're supported by stats numbers. So making sure you don't skip the stats is important. This is something that perhaps is relevant across the whole report, but I think particularly with marketplace, right? while there will be reasons for optimism, and this isn't about like self-flagellation or sort of doom mongering or anything like that, an unreasonable level of positivity sort of in 2026 reads particularly badly, because obviously you can imagine that your audience is going from reading the Financial Times or whatever they might read, and then opening your report and going, oh my God, these folks perhaps seem wholly divorced from the reality of the world. So you don't want to kind of create that feeling in the mind of your audience. Equally, Marketplace has become one of these sections of the annual report that can be hamstrung by, oh, well, we always do 2 pages of Marketplace, right? So it needs to fluctuate as global events occur or not, right? Is what we would argue. So our first winner, our first top dog is Hiscox, obviously the insurance firm, FTSE 100, and they probably did. So I mean, there are certainly examples of other reporters who pulled out kind of similar topics, but you just cannot beat the clarity with which Hiscox talk about the fact that it's called The World Around Us. I'm really a big fan of as well. Really like that it's clear. Look, economic uncertainty, geopolitical volatility, climate change, AI and data, cyber threats. Right. This is a really good shorthand for what most businesses are kind of wrangling with at the moment, and the stuff that is changing the most. And this is just such a clear, crisp identification of these big, important topics that I thought it was sort of inarguable, really, that it had to be one of our top dogs. Our second top dog is Lion Finance Group, formerly Bank of Georgia, a new one for us this year. We've not featured them before. And they do one of the things that I mentioned just now, which is to say that they back up everything they're saying really well with statistics, numbers. And you can see some of that here, and they use charts and graphs and visuals to kind of bring it to life. And it just feels massively more credible than just sort of a general, perhaps, kind of discussion does, right? And you can almost have it centered around the numbers, where you start with a chart and then you sort of explain, well, what are the implications of this for the business? They also have quite a bit of this discussion, right? Like I said, it's pretty common for you to see Marketplace as a 2-page piece, but the fact that they've got these graphs here extending over 4 pages and with quite a lot of high quality analysis on them, it is a really good thing. So we're a big fan of that. So one of the perennial categories that we have here, of course, is the business model description. And I thought this visual of our little dog friend here was quite fun, because this is how it often feels when you're trying to make one of these things, right? For the annual report, there's a lot of plates to balance. So clear opportunities. The business model descriptions are offering a really clear explanation of what you do, right? Less is more. Conciseness is really important, and just avoiding the jargon and that these things kind of tend to attract is really important. Explaining how you make money, which sounds very basic, but is a remarkable number, to be honest, of the FTSE 100's business model descriptions. Do not really, they might kind of gesture at it, but they don't really nail it. Demystifying complexity and taking on misconceptions. So sometimes even analysts who followed you for years, or people very familiar with the business, or people who work for you, will have some terrifying misapprehension about, or misconception rather, about what you actually do and how you do it and all the rest of it. So really important to kind of take that on with the business model description. And then the last one here is identifying credible differentiators. So just as we've got opportunities, we've got pitfalls. I think overemphasizing the graphics is a big one to avoid if you possibly can, right? These things, people like them to be graphical. I think maybe it's something to do with the use of the word model, which is absolutely fine, and everything else. But ultimately, the best ones are the ones with high quality narrative, with graphics as a kind of supporting feature rather than the other way around. We don't like to see combined business model and strategy, because they are, really two quite different things. Limiting space, as with Marketplace, business model tends to be one of these things that people feel they have to squeeze onto 1 page, 2 pages, and that is just not the case, right? And the best ones don't tend to do that. And one of the things that I see a lot, I would say a little bit too much, is this focus on stakeholder outcomes. I'm not entirely certain where this has come from as sort of an absolutely core part of the business model description, but having looked at so many of these in the FTSE 100, I would say a clear majority kind of spend a lot of time on stakeholder outcomes and not a great deal else. And you just think, well, this is, I would put that as like number 7 or 8, right, in the list of things that are important. So yeah, stakeholder outcomes, great, if you've done all the other things that you should do to make it good. But otherwise, leave it out. So as we were reading through, we collected lots of statistics, as you might expect. The average length of the business model description is 2 pages, which I really don't think is enough. 80% of them reference revenue or cash generation. Like I said earlier, though, a lot of reporters kind of gesture at it. They might include a sentence or two. Whether that's really fully explained, I would say very rarely is that the case. And then capital allocation, which of course is sort of the next step on. If you talk about, well, this is how you make money, and then you perhaps might talk about this is how you spend it. So about 57% do that. So our first top dog on business model description is Experian, and they do a really nice job in terms of, so they do something that I think is sort of relevant to a lot of larger companies, FTSE 250, FTSE 100, in that they do multiple things, right? It's quite rare to have a big business in the UK that's listed and you only do one thing or even 2 things, right? So Experian have these graphics that sort of explain the overarching kind of approach they take to their business. But then they have these sections after that where they talk about the different segments and even the different businesses within those segments and how they kind of function. And I think this is what a lot of reporters kind of resist for some reason. I think they kind of go a little bit too quickly towards simplification when actually it doesn't take all that much space or effort to kind of do a really good job on explaining the complexity, right? I think that's what I would always suggest, is that folks kind of take on complexity head on rather than kind of almost zooming past it because, oh no, this is too complicated, or makes us appear too complicated, right? So you can see here, this is a zoom in on part of their spread. You can see that they talk about what we do, key clients, key data sets, revenue model, market position, and then kind of key competitors for each kind of bit of the business. And this isn't fantastically detailed by any means, and there is more detail to be found elsewhere. But the fact that they do it is very unusual, but I think something we would like to see become a lot more common. Next top dog is IHG. I have to say this is a bit of a perennial favorite for us because it is almost inarguably the strongest one in the FTSE 100, and that's because they really do focus on the how we make money question, right? So you can see they've got a bit of what we do stuff at the beginning here, which is great because it's sort of numbers focused and quite objective and straight. Then they get right into, well, here's how we generate revenue, and they sort of give you such a good step through of where the money comes from and all the kind of different stakeholders and people involved and things like that. And then they explain, well, how does that kind of turn into, how does revenue turn into profit? How do we allocate capital? How do we spend it? Capital expenditure, and then a little bit on their dividend policy and shareholder returns. It's really good, and they've added in recent years a little bit more on kind of ancillary fee streams, which kind of come on top of their basic business model, and a little bit about their differentiators in the eyes of their customers here on the right. And I think I would make a similar point as I made with Experian on the ancillary fee streams in terms of this is complexity, right? Because it's a little bit of it's other activities kind of on top of their base business model, but they're embracing it. They're not hiding it. They're not saying, well, oh yeah, we also do this, or not even mentioning it. They're actually going for it. So I think that's really commendable. Okay, so of course, one of the other kind of critical sections of the annual report is strategy. And there are lots of opportunities to do a great job here, right? So the basics should really be, we've got to talk about immediate and longer term plans or medium term plans. Obviously, this will vary by sector in terms of how much you're able to talk about the future. But we believe that most companies should be able to do more than they do at the moment. We understand that everyone is a little bit spooked by the way the world has been for the past, I don't know, depending on when you want to count from, 10 years, 6 years, 2 years. But regardless, things are clearly a little bit up in the air now. And the response we have seen, unfortunately, from a lot of reporters is to really kind of pull back on how much they're talking about the future. But we think that should change. Measuring performance, of course, is important, ideally with KPIs, but not necessarily. Connecting to market context, which I described earlier, and explaining changes and course corrections, right? And this is something that is inevitable when you have a strategy, especially one that stretches over years. It will not remain in aspic. It will change and it will evolve. And companies that sort of seek to hide that or sort of paper over that in some way, I think it's not the right approach. And investors and stakeholders will reward you for being honest on that front. Things to avoid: combining things like your pillars, your platforms, your frameworks, your supporting strategies, and whatever else it might be. All these abstract concepts can get pretty unpleasant to read if you aren't super familiar with the company itself, and ideally you want to limit that. We read a lot of plans that feel very broad and lack detail, and something that comes up a lot as well is that companies will have an articulation of their strategy, perhaps that's in the investor presentation, perhaps one that's in the annual report, another one that's on the website, another one that's in another presentation, and they don't quite gel together. In fact, some of them can feel very different. So making sure it's consistent is important, and then making sure as well that we don't focus too much on past performance, right? So a lot of these strategy sections, obviously strategy means this is our plan for the future. But, I would say, to be honest, the vast majority of these FTSE 100 reports nowadays read just like, well, this is what we did in the year, right? And that's kind of it. So, yeah, focusing too much on past performance, not great in terms of best practice. So first one here is Whitbread, and this is a bit of a returning champ as well, because their strategy section is extraordinarily good. And this year they had an interesting kind of wrinkle to that in terms of they added a new, so they got, I think the situation was that they got 2 years into their existing strategy, and the business changed, the world changed, and they discovered that they had to replace it with a new 5-year plan. And they were very upfront about that. It's like I said just now about explaining course corrections and all the rest of it, right? Is super important. And they did a fantastic job at this. And the way this is set out is just so obvious and so clear, just like what I liked about the Hiscox one, right? There's no way you can miss it, right? So our new 5-year plan, and then you've got pillar 1, pillar 2, and then on the next page, 3, 4, and 5. And they all, all this information is really good. I really like the bullet points, very kind of accessible, readable. And it clearly talks about, well, these are the outcomes we want in 5 years versus now. And these are all quite specific, and there's, they mention lots of numbers, and they kind of focus your attention on these two big numbers, like this one here, generating free cash flow of 2 billion, and increasing by 500 BPS ROCE, right? So this is just done so well. And this is on top of what is an exceptional strategy section in general. So I'm only able to show you like a fraction of what they've got. I mean, it must stretch over 20, 30 pages or something, but they've got a really good, almost kind of editorial run through what they're planning to do. And you can see here, this is their kind of, the kind of few pages on what they're going to do in Germany, or what they are doing in Germany. And it's just really well written. It's supported by numbers and graphics and things like that. They have these little pullouts just showing performance in a really clear, obvious way. And yeah, it's hard not to be a fan, I've got to say. The second top dog on strategy is Coca-Cola HBC. And they do a lot of things right, for sure. So again, somewhat similar to Whitbread, the way that it's put together feels quite editorial, with these kind of shorter subsections within it, right, without these huge kind of wads of copy. They do nice little things like explain their highlights in the year over here on the left. They connect KPIs, principal risks, opportunities, material issues, which is all really nice. And the thing is written in a way that makes you kind of believe that it's real, which is cool. They've got some nice imagery here. They also do, again, this is something that, so while they do not do the kind of look ahead to the medium term, longer term, they certainly do the priorities in 2026 piece really well. And again, they're using bullet points, and these are all quite specific things they plan on doing in the year ahead. And I think that's really great. And we don't see that particularly often nowadays. Okay, now I'm going to hand over to Clive, who's going to talk about reporting on AI.
Thank you, Nick, and good afternoon, everyone. I hope you've all got a cold drink to hand, perhaps some AC or ideally both. So our next category, as Nick mentioned at the start, is a new category. How are companies reporting on AI? Of course, that's very different to how companies are reporting with AI. That's probably a whole different webinar. Anyway, the short answer to how companies are reporting on AI is increasingly. So from our research across the FTSE 100, which includes all the kind of March year-end reports that published in the last month or so, 2/3 reference AI in their description of strategy, and that's up from only 23% last year. And over half mentioned the board's oversight of AI, and that compares with around 38% last year. Okay. Let's take a look at the opportunities. What does good look like? Well, first, of course, AI isn't new anymore. We're all using it. We're all using it every day. It's no longer a technology story. It's a business story. What problems is it solving? How does it support the strategy? How is AI measurable value, creating measurable value for your business? And what are the productivity improvements? Have operating costs reduced? What's the scale of revenues generated from AI-enabled products? And how is it strengthening your position, your competitive advantage? And will competitors struggle to replicate what you've achieved or what you're achieving? And crucially, how are you managing AI responsibly? What governance systems are in place? And where does human oversight come into play? So into the sort of pitfalls on the right, AI washing. Let's not treat AI as a marketing label. Let's explain its strategic significance, its impact on your business model, your future investment plans, and implications for competitive positioning. Okay, so I've got two examples to share with you. And again, as AI is relatively new, some companies have adopted it more quickly and are using it more effectively. And I suppose the two that we've selected here are perhaps at different ends of the spectrum, but both I think are worthwhile exploring. And I hope you'll create or you'll get some value from both of them. Okay, so the first one is Experian again. As Nick was suggesting, they're a data and technology company that operates globally and supports critical financial and commercial decision making. So AI is key to their operation and has been for years. It features throughout their report, I think actually in close to sort of 200 references to AI. Not that that's a measure of strength, but yeah, it's a constant theme throughout the report. And I'm just going to share a couple of those examples with you. Okay, so first up is there's an opening piece from the CEO, separate to the CEO's review, which emphasizes how AI is changing the world and how Experian is ready for that and is already kind of delivering great advantages to its business, its customers, through embracing AI, which it's done for years. The CEO refers to AI as representing a generational opportunity. So a major shift in how organizations will progress and operate. The next example, I've just jumped on to there. Let's go back. Yeah, so the next example is an extract from the business model, which Nick has already covered. But it just emphasizes, as well as talking about how AI is pivotal to the business model, it picks out why it will make a difference to the two sort of broad areas of the business, which is consumer and B2B. And there's a little kind of Q&A that appears through the business model that answers those couple of questions. Again, just giving more valuable insight to how Experian operates and how consumers and their B2B customers will benefit. Moving on to the marketplace. And again, here, Experian not only kind of refers to the influence of AI, but also then provides kind of quantifiable measures of the total addressable market in three of its core markets, and how AI is kind of reshaping them, and the role of AI. Again, that's worth a look as well. On to our next example. Yeah, and this concludes the strategy section. Again, talking about how AI is being used to execute the strategy and bring about the advantages that Experian has planned for. So again, a really good example. And throughout the report, there are case studies that go into more detail on Experian's use of AI and how, in this case, consumers are benefiting. Okay, the second example, the second top dog of in the AI category is Next. Now, Next have not embraced AI in quite the way that Experian have done, and they've been very honest about that in their kind of two-page discussion of the company's use of AI in their strategic report. Let's just take a quick look at that. Yeah, so as I mentioned, and I don't know if you're familiar with Next report, but they're presented with in a very kind of very plain way, but the writing is very good, very direct, very honest, and therefore extremely credible. So they talk about, if I can just quote from the report, in most areas we're only scratching the surface of what AI can do for the business. And then they just talk about a few examples of where they have made more progress. And on the right-hand side there, they actually quantify some of the advantages it's brought to them in their cost centers and their use of technology. So that's helpful there. And then at the bottom of the right-hand page, they also talk about the implication for jobs. And again, brutally honest. Again, just quoting from their report, bottom line, at Next, it appears to us that AI will change people's jobs rather than replace them, making them much more effective and taking away many of the tasks they enjoy least. People will need to adapt and change, but Next people are generally good at that. And then it concludes with, if we are reflective on the wider economy, then those in jobs need not worry too much. The challenge would be for those looking to join the workforce. So again, frank, pretty brutally honest, but also I think that helps to kind of build the report's credibility and therefore Next's credibility as well. Okay, on to the next slide and sustainability with Vicki.
Yeah, thanks, Clive. Just before I introduce our sustainability top dogs, if you've got any questions for us, if you could just pop them in the Q&A function, and we can answer them at the end of the session. Okay, so on to our top dogs for sustainability content in the annual report. So we shortlisted reporters who have clearly started to think ahead and make meaningful progress towards complying with the UK's new sustainability reporting standards, which are, as Nick explained at the start, based on the ISSB Foundation's S1 and S2 standards. And we're expecting these to be enforced from 1st of January 2027, so not long now. We awarded extra points to reporters who've started to talk about the financial impacts of climate change in more detail, whether that's describing the financial investment required to achieve decarbonisation goals, or reporting on the potential financial impacts of different climate scenarios. And we've given more merit to reporters who have integrated sustainability considerations into their business planning, rather than siloing it as a separate content unrelated to financial performance. So I think in terms of the pitfalls, being clear about your most financially material topics, I think that's probably the biggest pitfall to avoid, and it's one of the most important first steps that companies should take as they prepare for UK SRS. And we really valued those reporters who'd honed in on those most financially material topics within their reports. And we also picked out reporters who were clear about sustainability challenges they faced, rather than leaving issues important to stakeholders completely unaddressed. So just going into the pitfalls, we did see some reporters becoming susceptible to the pitfalls of reporting on too many material topics, or those that perhaps weren't financially material. And the danger here, of course, is that sustainability content can become quite bloated and the most important messages obscured. We also saw some reporters not linking sustainability considerations sufficiently to business commercials. And then I think the other pitfall that is quite easy to step into is too much focus on climate targets and metrics without the balance of those broader sustainability targets. So material issues do extend beyond climate. So that broader focus on metrics, that'll also be increasingly important under UK SRS too. Okay, so in our research, we did pick up some quite interesting stats on sustainability. So quite interestingly, a noticeable shift was the number of businesses being clearer about their plans to comply with UK SRS. So this actually leapt up from 13% of businesses last year to 20% this year. About just under half of the FTSE 100 reference UK SRS to some extent, but it's often limited to just to a passing reference. There was a 20% increase in the number of businesses clearly reporting on the financial impacts of climate change, which was really encouraging in terms of UK SRS preparation. And we also saw an increase of the number of reporters including their climate transition plan in the report, and that was up 16% on 2025. So under UK SRS, companies who have a climate transition plan will have to publish it in their annual report. And the adoption of net zero targets was near universal, with just a handful of reporters not adopting them at all. Okay, so on to our winners. Our first sustainability top dog is Midlands-based water and wastewater business Severn Trent. There are so many interesting features about the sustainability content in this report. I think firstly, sustainability isn't siloed into an isolated section within this report. It's integrated throughout, particularly. So here it's integrated throughout the strategy section, which really underlines how key it is to business performance. We really liked the approach taken in the nature and climate section, which starts with a double materiality assessment and explains where material topics are covered across the strategic report. And actually, interestingly, our research found that 62% of the FTSE 100 now reference a double materiality assessment in their report, with many reporters including the results of the assessment within the report and others discussing their plans to do one in the future. So Severn Trent have helpfully presented their climate and nature content together, which also really helps to streamline content. Okay. I've saved 4 points for their engaging and illustrative approach to presenting the value chain. And on the value chain, they also highlight the dependencies and the impacts at each stage as well. So it's quite a nice feature. Okay, so on this page, Severn Trent present their climate and nature-related physical and transition risks, and we really liked how they've included specific figures to demonstrate the financial impacts that risk could have. We also liked how they've structured their climate and nature content using the 4 pillars of the ISSB framework. So, of course, strategy, risk management, governance, and metric and targets. So it's really preparing the ground for UK SRS compliance. And here they combine their climate and nature metrics and targets. And in the right-hand column, they include the amount of capital deployed towards climate-related risks and opportunities. Okay, and finally, they've got a really helpful TCFD, TNFD framework summary table aligned to the ISSB pillars. Okay, our next sustainability winner is Medical Technology Group, Convatec. So there are a few winning features we wanted to showcase here. We really like the pull-out on the right-hand side, which highlights how much they're investing in decarbonisation and their committed spend on it from 2026 through to 2030. We also really love the transparency of this feature. So this feature's on how they're responding to the challenges of the low carbon transition through their value chain. And here they describe capital spending on decarbonisation initiatives in the climate-related metrics and targets section. They're really clear on how they're allocating finance and resources to limit risk exposure related to climate change. Okay, next up onto our winners for risk. Okay, so risk sections are often where you can find the most dynamic and revealing content about a business and its challenges, but how do you do it well and who is doing it well? So this year, we've seen many reporters stepping up in this area, and we've seen some really truly excellent risk sections. The strongest reporters explain with real clarity how risk can impact business strategy and future prospects, meaning that the reader doesn't have to work it out for themselves. Some of the leading reporters took a really dynamic approach to content, so ensuring any changes to the risk environment were really clearly explained and presenting content really imaginatively with case studies and infographics. Some of the most common pitfalls we saw included a lack of commentary about changes to the risk profile and unimaginative replication of similar presentation formats year on year. And we also took marks off for overuse of icons, which I think are intended to improve linkage, but sometimes can add to confusion. So our first winner is the property company, British Land. So we really like how they've highlighted 2 emerging risks. It's just on the right-hand side here. So they've highlighted elevated geopolitical instability and advances in AI and automation. They talk a little bit in more detail on those 2 emerging risks. They take a really dynamic approach to the content. They describe progress made with risk priorities in the year before, and they cover priorities for 2026-2027 as well. And there's also a spotlight feature on preparedness for Provision 29 compliance. So the format for their principal risks is excellent, and it includes a description of how they're approaching any opportunities associated with each risk, and they also identify their key risk indicators. Like many reporters this year, they've identified the macroeconomic environment as a key risk. Okay, our next winner is industrial engineering company Smiths Group. So their approach to risk content it's really exceptional. The section kicks off with a handy summary table describing the key risks, the likelihood, risk velocity, and year-over-year trend. And like British Land, the geopolitical environment is their #1 risk, and they support reader understanding by clearly explaining how the risk could impact their strategy or business model. So interestingly, they include examples of how they know their controls are working effectively, and they also describe developments during the year in detail. They also have an excellent summary table at the top here, just showing the connectivity between the principal risks. So Smiths go one step further in their going concern and viability statement, and they explain risk scenarios in detail and link them to the principal risks. So it's a winning risk report for the second year running. Okay, over to Clive.
Great, thanks very much, Vicky. And yeah, our final category is digital reporting. And as you'll have noticed, for each of the 6 categories we explored so far, we've highlighted examples from PDFs. Now, of course, the continued focus on print-oriented PDFs is odd when you consider that PDFs are ignored by AI searches. And as we all know, AI is transforming the way investors are making decisions about companies. Only digital-first annual reports are accessible to investors' AI tools. That's full digital reports created in native HTML with XBRL tagging. The digital UK SEF report is also the mandatory version and has been since 2021. Of course, companies have attempted to meet their obligations to file the HTML report by converting the PDF at the end of the process, treating it as a back office compliance exercise. Now, up to now, regulators have tolerated this, but they're now actively inspecting mandatory digital reports and urging companies to embrace true digital-first reporting. Provision 29 of the code, which came into effect on the 1st of Jan this year, increases the focus on this. It demands a board declaration in the annual report on the effectiveness of internal controls, including reporting. Okay, so let's take a look at the opportunities and pitfalls. The opportunities of digital reporting present a compelling case. AI readability is absolutely crucial. Without your report being presented in full HTML, AI searches are bypassing your regulated, board-approved, audited annual report and getting information on your company from other, less reliable sources. Created in HTML, it's responsive. It works on any device from a mobile to a monitor, and it's accessible, complying with accessibility regulations. It has all the characteristics of a website, so it can be as engaging an experience as you want, using video and animation. A new software like Reportal is unlocking the power and potential of digital-first reporting, creating multiple formats from one source of content. The full HTML version, the XBRL version, print and PDF. It makes for a super efficient and cost-effective process, and it meets regulators' UK SEF requirements. Over to the pitfalls on the right. Obviously, converting a PDF to HTML at the end of the process can be a scramble, and it's prone to error. And of course, lastly, back in the day, some companies used to produce a full HTML report as a parallel but separate process to the PDF. Time-consuming, inefficient, and very expensive. So no one's done that this year. Okay, so on to our top dog. There's only one top dog in digital reporting again this year, and that's Airtel Africa. This report has been created using Reportal, the innovative purpose-built digital first reporting CMS that delivers fully compliant digital PDF and print reporting with XBRL tagging, all from that single source of content. The digital version of the report is everything you'd expect from a contemporary website. It's fully accessible, responsive, navigable, interactive, including the use of video, search engine friendly, AI friendly, and measurable with user analytics across the report. Okay, so let's take a look at that report now. Great. So the annual report appears on the investor homepage, and as you scroll through the kind of landing page of the report, it appears like many of the kind of summary reports that around half of the FTSE 100 reports use to date, just showing highlights of kind of key aspects of the report. So, for example, an extract from the chair's statement, from the CEO's review, from the strategy, etc., etc. But of course, the difference with the full HTML report is that every page of this report is presented in full HTML. So any user can access any aspect of the report. Incidentally, the sustainability report for Airtel Africa is also produced in a digital first format and is produced on the same day. Okay, so as we scroll through the navigation there, let's take a look at one of the aspects, perhaps the market environment investment proposition. So all of this is obviously represented in the PDF as well in a similar format, but obviously you have more flexibility with the digital version, using accordions to make it more accessible, and the use of video where you think appropriate. So here we have the chair statement, and again the full letter from the chair is featured in the statement. The CEO's Q&A. There's a video of that the user can enjoy. But of course, the full transcript of that Q&A is also featured in this report below. By the way, it can also be translated into 2 of the languages that are common across Airtel Africa's operations, which is French and Swahili. Okay, on to the strategy section. Again, each of the pillars of the strategy are described with kind of progress and priorities for the coming year. And there are case studies that support the strategy in action, showing different aspects both for the mobile services and also the mobile money part of the business as well. Okay, moving to back to the nav and down to the business reviews. Again, they're all accessible as well, obviously. Here we're looking at the East Africa division, and we see the performance highlights presented here. And then we go into an overview of the operations in the region, performance, as well as a summary of legal and regulatory changes across their the countries of the East African region, again supported by a case study. If we now go into governance, again, all in HTML, let's have a look at the remuneration report. Here's the letter from the RemCo chair. And as we scroll down, we'll see, again, that's in full HTML. We'll get to the the kind of remit of the RemCo there before we then move into the Rem at a glance. And again, you'll see quite complex information presented here. And again, being responsive, this complex information then responds to being presented on a mobile as well. So it just reformats to make it visible on a mobile. Going into the financial statements, again, everything's covered in full HTML. And this is where the XBRL functionality comes into play. So if we scroll down and perhaps pick on profit before tax, we can see the XBRL tagging and the IFRS reference as well. Okay, so that's a sort of a quick tour through Airtel Africa's innovative digital first report. Yeah, so in the coming years, hopefully we'll be looking at your digital first reports, your mandatory digital first reports, rather than your voluntary PDF report. And now that may take some time. The transition will obviously not be one that will be kind of rapid to play out. It may not be next year, but perhaps by 2030. You'll all have embraced digital first reporting and be enjoying the benefits that apply to your team, your company, your investors, and of course AI. Okay, back to you, Nick.
Yeah, so you can see here we've got our 2026 top dogs. Well done to all of our winners. some great reports in there, and it's always inspiring to see some of the best practice every year. So we really applaud those who've kind of gone the extra mile and put the effort in. So one of the things that Vicky mentioned earlier was that we're asking for your questions, and indeed we've had a few of those come in. So I'll sort of perhaps send one to each of us three. First one was, so we think most people know what our business model is already. Do you still think we should take the time to do something more elaborate? I mean, short answer, yes. Because you may be or feel relatively widely understood by investors in terms of how and where you kind of do what you do, but actually there can still be these kind of meaningful pockets of kind of ignorance about how you really generate cash, where in the business that happens, what your sustainable competitive advantages might be, and all the rest of it. I mean, we find businesses, even like typically the most simple business model you can think of is retail. But I still look at some of those and think, I don't really know how this works behind the scenes. You know what I mean? Is this there are lots of questions that remain unanswered by these things typically. So I would say almost, unless it's Continental Hotels Group, there's more work to do on the business model. Another question, perhaps one for you, Clive, on the AI front is, do most reporters consider AI to be more of a threat or an opportunity?
Yeah, great question, and I think it's a fairly balanced view of how companies are reporting on AI. Last year, certainly it did feature much more significantly under risks, but this year, as I mentioned, there's much more of AI featuring within strategy and business model, certainly within those companies like Experian who are perhaps more sophisticated in their use of AI and really understand the value of it. By the way, there's a few questions in the chat. There's one, thank you for that, Rachel, about different views on how retrievable PDFs are for AI search. Now, they do. AI searches do overlook PDFs, and how to get the AI to read a PDF is to actually feed it into your questions. So it does ignore PDFs. There's another question around sustainability information. How much do you need to include in an annual report if you produce a sustainability report? And actually, I think the Airtel Africa example is a good one to take a look at for that. There's minimal content in terms of the kind of sustainability kind of strategy there. Obviously, there's all the compliance requirements they have to do, largely centered around TCFD, and that will be the case with obviously UK SRS as well. But it's largely focused on the compliance information they need to put in the annual report. And real minimal information on the sustainability strategy, which, as you perhaps suggest, Kay, is covered in much more detail in the sustainability report. And there's another question about, do you need a colourful photo-filled annual report to have a successful annual report? Well, I think if we take a look at the next annual report, you'll see that because of the I think really engaging way they write their report, I'd call that a successful report. It's very upfront, frank, and really insightful. So obviously, the use of kind of graphic elements and infographics and photography is to make it more engaging to the human reader. But no, it's not absolutely essential, so long as there are other strengths to the report that make it a worthwhile read.
Right. Okay.
Other questions?
Yeah. So perhaps one last one for Vicky. Are many companies disclosing ahead of time in terms of like UK SRS, ISSB?
That's an interesting question. I think We have seen a couple of partially compliant reports this year, but only a couple. And I'd say most reporters in the FTSE 100 aren't there yet. They're just talking about making plans towards compliance, or they're just sort of giving a passing reference to it. And I think, you know, until the regulations have been finally approved, you know, I can see why reporters wouldn't do that. But we are seeing some reporters clearly making steps towards compliance. So, for example, in the Severn Trent example that I showed earlier, they're combining TCFD and TNFD, and they're using that 4-pillar framework, which is the ISSB's framework, which will obviously help with future compliance with the UK SRS, which is based on ISSB. So we are seeing some initial steps, some reporters more than others, but certainly I haven't seen anyone that's fully compliant yet.
Good stuff. Okay, so thank you for your questions and thank you for joining us. This has been Top Dogs 2026, and we hope that you come back next